Salewonan. Good evening, ladies and gentlemen. It's been a roller coaster of a year. In our past episode, we were talking about how the economy has been deteriorating, and it's said to continue to talk about the same issue. As you have noticed in the past 2 or 3 weeks, things have really gone from bad to worse. The black market rate, the power market rate has just gone wild, and things are not looking good from an economic perspective. But having said that, we have in the past spoken about the different opportunities that are available. I remember a few weeks ago I received a phone call from a friend of mine, and they just received $40,000 from their employer as a retirement package. And they asked me to say, they said they had bought a stand somewhere in town in Harare, and what they said to me was, I've been given 12 months to pay. They said I can pay it now, but at the same time I also want to understand, can I not do something with the 40,000, so that I can then start paying over 12 months whilst I'm getting something out of the money. So today, regarding that, we have a guest, Cliff Bizure. He's an expert in the property market. Welcome, Cliff.
Thank you.
Thank
you for having me.
How do you see the Zimbabwean economy? What is going on?
Okay. The Zimbabwean economy at large, there's a lot that is taking place. It depends on the type of sector that we are looking at. As you highlighted that I'm a real estate expertise, so my main focus will be mainly on the property market, what it is at this present time. So at this present time, the Zimbabwean property market is starting to peak. Since we are coming from a pandemic, where the property market was heavily affected, where in the market where we were having limited stocks in terms of real estate properties, tenants that were available, and also new development projects. So right now it's peaking. There are a lot of construction that are taking place. That means there's more stock on the market. Despite the limited mortgage facilities, as you understand, the period that we are coming from, the challenges in terms of liquidity, so, and also changes in currency in the hyperinflationary environment, where banks are not favoring to issue mortgage facilities. However, we are having positive progress as well, as some banks have started to give mortgage facilities. So that's the stage where we are at this present time.
So it's interesting. I think you raised quite a few points in there, and just thank you for that overview. When I look at the property market, just like what my friend was asking, where are we? Yes, it's picking up. Where are we? Where are we? Can if I invest my money in the property market, won't I lose out? Okay. Is it safe for someone out there to bring in their money? They've got 50,000, they've got 100,000. Is it safe for them to invest in the property market? Where are we standing?
Okay, at this present time, it's a buyer's market, which means the buyers are the ones who are calling the shots. That means a property seller can have a property, but in terms of negotiating, the buyers have negotiating powers. That means it is the right time to buy, not to sell. So that's the stage where we are in. That means there's an opportunity for your friend, as you alluded, that is 40,000, for him to get a good property in this current market. So the opportunity is still there. And then in terms of safety, it depends on the type of property that they are interested in. But the most recommended form of investment is to buy a property with title deeds as compared to cession. So it all depends with the risk appetite of the buyer and also the location that he prefers to buy.
Okay. I get the part where you mentioned location, but I want to take you back to the indicators in the property market. What are the sort of returns that we are getting in the market?
Okay. In terms of returns, it varies, but the most paying is the high density property, where we are getting about 20% return. And then low density, medium density, we are getting 10, and then low density about 9.
So this is 20% per annum.
Okay, it's 12%.
12%
yes,
per
per
annum.
annum. Yes.
Okay.
Yes.
So let's say I invest 100,000, I'm likely to get 12,000 back.
Yes.
So which means maybe the payback period
will be shorter for high density, and then for medium density slightly less, and then for low density as well. But also, in as much as we are mentioning that high density might be, low density might be less, but there are certain forms of investment where you can invest in a B&B, where there are short-term leases. Those type of investment, they have more return as compared to where you are just leasing your property to an individual owning the property for the entire year or 2 years to come.
It's quite interesting. I think the fact that you're bringing in the B&B issue, that brings me to this next question to say, what are the opportunities or the different options? Let me say options. What are the different options that are available in the market, in the property market?
Okay. Yeah, in terms of different options, first we'll be looking at the renting option, where a person can buy a property and rent it out and get rentals monthly from those properties. And then the other option in terms of form investments is house flipping, where a person can buy a property which is at a 70% less value from those that are on the market. That means it's a depressed property. Sell that property for a profit, mainly we refer to it as capital gain on disposal. And then also the other opportunities that are there as well is where you invest in indirect real estate investments. We'll be looking at investment in real estate investment groups and also REITs. But real estate investment groups not yet in Zimbabwe, but REITs we have. It was registered in 2021, and Tigere is pioneering that option.
Okay. So those are three options. I would assume that then the B&B will be the fourth option, which is more or less a tourism option.
Okay, the B&B, it falls within the category of renting, but we refer to it as short-term leases as compared to long-term leases, because you'll be paying rent for using the property for 1 day, 2 days. So it's more like short-term leases, and they do not have agreements. It's merely a contract when you get inside and then use the property for a short-term period, you leave the property. So it falls within the category of renting the property, but it's more short-term lease rental.
I think it's quite interesting. I think for now, let's call it a day for now. But in the next episode, we are going to delve more into the options that you brought about. We want to understand more about this. You said house flipping.
House flipping.
You also said rates.
Rates, yes.
We want to understand more about them. Then this B&B, I want to understand what if I don't buy a house? What if I just go to AB and to someone else and start renting? Is it possible for me to then use it as a B&B, things like that?
Okay.
So in the next episode, I think we want to get into more detail around these issues. So thank you, Mr. Cliff.
You're welcome.
So guys, that's what we have about property. It's quite an interesting topic, and we want to get more from Cliff and understand these issues. Remember to continue the discussion. Let's have your questions from him for him to answer. What else do you want to understand about the property market? What are the risks? He's going to answer that. So if you have any more questions around this topic, continue to place them in the comment section, and remember to like, to share, and to subscribe. Thank you.